Hello everybody, and welcome to our News Digest. I'm your host, Sabrine. And in today's video, we're checking out all the stories that made financial news in the second half of April. But before we get started, make sure you have subscribed to the iqoption YouTube channel. So, let's dive in. Elon Musk buys Twitter for $44 billion. We've been hearing rumblings of Elon's takeover bid for some time. In fact, the Tesla and SpaceX CEO had been hinting at buying the giant social media platform since at least December 2017. This all came to a head in early April when the eccentric billionaire announced he had been passively acquiring Twitter stock in large quantities, so much so that Musk became Twitter's biggest shareholder with a 9.2% stake at the company. At this point, Twitter CEO Parag Agrawal offered Elon a place on Twitter's board. However, accepting that role will prevent Musk from ever owning any more than 14.9% of all Twitter stock, and so Elon politely declined. By April 21st, Elon announced that he had secured $46.5 billion of funding, $25.5 billion in loans from investment bank Morgan Stanley, as well as $21 billion of his own funds. With this capital, Elon was prepared to make an offer of $54.20 per share directly to the remaining shareholders. This represented a 38% premium over the stock price just the day before. The board met on Sunday, the 24th of April, to evaluate the proposal and ultimately decided to accept the offer. And news of the deal, Twitter stock rallied as high as $52.10 per share on Monday, the 25th, before consolidating at around the $49 mark. So, with the takeover bid accepted, what does that mean for Twitter as a publicly traded company? As of right now, Twitter is still a publicly traded company on the New York Stock Exchange. You're still able to buy, trade, and sell Twitter stock as usual. However, once Musk takes the company private, the ability to trade shares will be over. There are still quite a few regulatory hurdles to overcome before Twitter will be delisted through NYSE, and the many experts believe that trading activity will continue for another few weeks at least. In saying that, many are predicting extreme volatility in Twitter's stock price over the coming weeks. But once the time comes, the remaining shareholder will be paid out the $54.20 per share that they own, and the share will cease to exist. Tesla shares slide on news of Twitter purchase. While most of the world fawned over Elon's debut with Twitter, one of his other enterprises took a rather massive hit. Upon news of this historic $46.5 billion Twitter takeover, Tesla stocks took a nosedive almost immediately, crossing under the $1,000 mark to $979.21 and dropping the EV manufacturer's market cap down to $906 billion. This sell-off has only gotten worse over the past few days, with Tesla shares now sitting at around $884 at close on Thursday, the 20th of April. This capitulation wiped more than $120 billion on the valuation of Tesla, an amount almost triple how much Elon needed to buy Twitter outright. So why the dip? Well, there's a few reasons. The first being nervous investors who are worried Elon has overextended himself to make the purchase. Musk has leveraged billions of dollars worth of Tesla stock, more than half of his total portfolio, just to raise the capital needed for the purchase. With Tesla stock now inexplicably linked to Twitter, many feel that if the social media platform underperforms, it could start eating into Tesla's profit. Add this to the fact that Elon's being quoted as having said he doesn't care if Twitter is economical. These aren't the words you want to hear if you're all in on Tesla stock. New crypto altcoin named after Elon Musk raised red flags. Seemingly within hours of Elon Musk announcing his intention to buy Twitter, a brand new meme coin appeared on the Binance Smart Chain. Elon buys Twitter is a BEP20 token that, according to its white paper, will eventually let users to earn revenue from meme propagation, a series of play-to-earn games, and yield farming. It initially launched on PancakeSwap and OpenOcean, Within 2 hours, the price had exploded up to 10.524%. But like most meme coins that launch on decentralized exchanges, price discovery is ruthlessly volatile. Almost immediately after its monumental pump, EBT capitulated to levels way below his launch price. In fact, as it stands now, Elon-based Twitter is currently worth $2510 million, more than $2,800 less than launch price. Most altcoin experts were quick to warn investors of a potential rug pull, with all the red flags of an elaborate pump and dump scheme becoming obvious. Huawei's Q1 revenue slides by 14% after poor smartphone sales. It's not just the real estate sector which is struggling in China at the moment, with telecommunication giant Huawei announcing this week that their first quarter revenue fell by nearly 14%, while their profit margin more than halved. This is compared to the same time period last year. Despite this, Huawei still managed to post a first quarter profit of 131 billion yen, or $20.63 billion. It's a Q1 profit revenue of 4.3%, and while being in the black may appease investors, keep in mind that Q4 profits were at 31% just last year. Most of the decline comes from lackluster smartphone sales, a condition exaggerated by former US President Trump's tech blacklist of the company back in 2020. But it looks like the slowdown of smartphone purchases in China isn't exclusive to Huawei. Many other manufacturers reported slow growth, including Apple, who experienced a 23% drop in new handset sales in China. Meta bounces back after April's sell-off. Back in February, the alarm bells were ringing at Facebook headquarters. The company had just rebranded to Meta, with Mark Zuckerberg's grand vision of an AR/VR-infused metaverse. While the concept isn't thrilling to many futurists, the metaverse commercial that Mark acted and directed in left many people scratching their heads. The stock market reacted accordingly, buoyed by news that active Facebook user numbers declined for the first time in its 18 years history. The share price tumble was immediate and dramatic, with now Meta losing almost 50% of its value in less than a month. Meta, Facebook was bleeding users to other social media platforms, most notably ByteDance TikTok, which is insanely popular amongst children and adolescents. The downward trend continued until early this week, when the new figure showed an uptick of 31 million new active users and higher advertising revenue. Revenue for the period jumped 6.6% to $27.9 billion, an amount that would have been even higher if not for the war in Ukraine. This resulted in the first real positive stock movement in the recent history, improving the share price from $174.95 to $205.73 in a single day. With the stiff competition and an uncertain social media landscape moving forward, who knows what the future will hold. Worst month for Dow Jones Industrial Average and S&P 500. Uncertain economic conditions have seen the Dow Jones Industrial Average and S&P 500 finish their worst month since March 2020, or the beginning of the pandemic. By the end of April, the Dow had finished 4.9% lower, the S&P 500 dropped 8.8%, and the Nasdaq tanked at massive 13.26% to record its worst month since 2000. Thank you so much for watching. If you learned something new, or even if you just enjoyed my voice, it would mean a lot to me if you hit that like button below. If you like what you saw and want to keep updated every time I upload a new video, go ahead and click that subscribe button below. See you next time. Bye!